Imagine this. You wake up in the morning. You grab your phone. Maybe you're checking your banking app. Maybe you're looking at your credit report before applying for a car loan, a mortgage, or a new credit card. Then you see it. Your credit score has dropped. Not by a few points. Maybe 20 points. Maybe 40 points. Maybe even more. And immediately your mind starts racing. Did I miss a payment? Did someone steal my identity? Did the bank make a mistake? What happened? The strange thing is that everything seemed fine yesterday. You paid your bills. You didn't max out your credit cards. You didn't take out a huge loan. So why did your score suddenly fall? If this has happened to you, you're not alone. Millions of people see their credit score drop and have absolutely no idea why. And here's the surprising part. In many cases, your score can drop even when you're doing everything right. There are hidden factors that most people never learn about. Factors that banks understand. Factors that credit bureaus track. But factors that regular people rarely pay attention to. The good news? Most credit score drops are completely fixable. In this video, I'm going to show you the most common reasons your credit score drops overnight, what each one means, and exactly what you can do to recover your score as quickly as possible. And make sure you stay until the end because one of these reasons catches thousands of people by surprise every single month, and avoiding it could save your score from taking an unnecessary hit. Let's get started. Why people get confused about credit scores. One of the biggest myths about credit scores is that they only go down when you make a serious mistake. Most people think, miss a payment? Score drops. Default on a loan? Score drops. Max out a credit card? Score drops. And while those things are true, that's only part of the story. Credit scores are constantly changing because new information is being reported all the time. Your score is more like a snapshot than a permanent number. Every month, banks, lenders, and credit card companies send updated information to the credit bureaus. That means your score can move up or down based on changes that seem small but have a bigger impact than most people realize. So let's look at the most common reasons your score may have dropped overnight. Reason number 1, your credit utilization increased. This is one of the biggest reasons people experience sudden score drops. Credit utilization simply means how much of your available credit you're using. Let's say your credit card limit is $10,000. If your balance is $1,000, you're using 10%. If your balance is $5,000, you're using 50%. The higher this percentage goes, the riskier you appear to lenders. Many people make the mistake of thinking, I'll just pay it off later. The problem is that your card issuer may report your balance before you make the payment. So even if you pay the full amount every month, your score can temporarily drop if the reported balance is too high. And here's something many people don't know. Most experts recommend staying below 30%. But the best scores often belong to people who stay below 10%. Reason number 2, an old account was closed. Now let's talk about something that sounds harmless but can hurt your score. Closing an old credit card. Maybe you had a card you rarely used. Maybe it had no rewards. Maybe you simply wanted fewer accounts to manage. So you closed it. Seems logical, right? Unfortunately, your oldest accounts help build your credit history. Lenders like seeing a long track record of responsible borrowing. When an old account disappears from your profile, it can reduce the average age of your accounts and impact your score. This is why many credit experts recommend keeping older accounts open whenever possible, especially if they don't charge annual fees. Reason number 3, a hard inquiry appeared. Have you recently applied for a loan? A new credit card? A financing plan? Even if you didn't get approved, the application itself may have affected your score. This is called a hard inquiry. Every time a lender checks your credit for a new application, that inquiry gets recorded. One inquiry usually causes only a small drop, but multiple inquiries in a short period can make lenders think you're desperate for credit, and that can increase perceived risk. Reason number 4, timing issues. This reason surprises a lot of people. Sometimes nothing actually changed. The timing changed. Your credit card company might report your balance on the 15th. You might pay your balance on the 20th. That means the credit bureaus see the higher balance first. When your score updates, it reflects that temporary number. Later, when the lower balance gets reported, your score may recover. This is why understanding statement dates is so important. Most people focus only on due dates. Smart borrowers pay attention to both. Reason number 5, lack of activity. This one sounds strange, but using no credit at all can sometimes work against you. Credit scoring models want to see responsible activity. If all your accounts sit inactive for long periods, there may be less positive information being reported. That doesn't mean you should spend more money. It simply means keeping accounts active with small purchases and paying them off responsibly. How to fix your credit score fast. Now for the part everyone cares about. How do you recover your score? First, check your credit utilization. If it's high, pay down balances as quickly as possible. Second, avoid applying for unnecessary credit. Every application creates additional risk. Third, keep older accounts open whenever possible. Fourth, make every payment on time. Even one late payment can have a significant impact. Fifth, review your credit reports regularly for errors. Mistakes happen more often than people think, and correcting them can sometimes lead to quick improvements. Real-life example. Let's compare two people. Both earn similar incomes. Both have access to the same financial products. Person A regularly uses 80% of available credit. Applies for multiple cards. Closes old accounts. Waits until the due date to make payments. Their score becomes unstable. Small changes create big swings. Person B keeps utilization below 10%. Makes payments early. Keeps older accounts open. Applies for credit only when necessary. Over time, their score steadily rises. Same income. Different habits. Very different results. Final thoughts. If your credit score dropped overnight, don't panic. A sudden drop doesn't automatically mean you've done something wrong. In many cases, it's simply a result of how credit scoring works. The key is understanding the factors behind the change. Check your utilization. Review recent applications. Look at your account history. Pay attention to reporting dates. And most importantly, stay consistent. Building strong credit isn't about being perfect. It's about making good decisions repeatedly over time. If you found this video helpful, hit the like button and subscribe for more simple money tips that can help you avoid costly financial mistakes. And tell me in the comments, how many points did your credit score drop, and were you able to figure out why? In the next video, we're covering one of the biggest traps in personal finance, the minimum payment trap, and how banks make thousands of dollars when people don't understand how it works. You won't want to miss that one.